Hello and welcome to the Friday market update. Well, we're in buying season. Mortgage rates continue to behave this week, and we got some good news too. So for top tier borrowers, mortgage rates are on conventional loans around 6.72% according to Mortgage News Daily, which is right at about a 4-month low. However, don't forget about those FHA and VA rates, which are now starting to flirt with 6%. Could they dip below that pretty soon? I think they could. So Wednesday was a day circled on many calendars. For some, that's because it marked the official last day of winter, or for you optimists, the first day of spring. So for those in the housing and financial markets, Wednesday was even more important. Fed Day, the Fed Day. We always are looking forward to that. Not really, but a lot of people do. As expected, the Federal Reserve, led by Chairman Jerome Powell, left their benchmark interest rates unchanged. All the anticipation, all the hype, much ado about nothing. But unlike Shakespeare's style, this version did not end in tragedy. Too much uncertainty. So the looming decision on April 2nd, which they're calling Liberation Day, will mark the next formal decision in the tariff saga. Could these decisions drive prices higher? Perhaps in the short term, but with long-term benefits for the economy. That is certainly the hope. Perhaps successful negotiations will happen before this date. We hope so. And then there's the continued slowdown in the economy. Is this just a I can't say this. Is this just a knee-jerk reaction, or is a recession imminent that could drive rates lower? Is the consumer tapped out with debt and high inflation? Personally, I think it's getting a little tough for the consumer. The Fed was left with no choice but to leave rates unchanged while it monitors these developments. So the good news, what was the good news out of the Fed meeting? They made other monetary decisions to give us hope for a happy ending. While the Fed isn't ready to end its tightening of monetary policy and lower rates right now, it is slowing down the pace, which in turn will support bond prices or interest rate markets and keep the mortgage rates lower. What does this mean? The Fed will actually start buying some bonds again, which they haven't in the past, which will help the interest rates continue to creep down a little bit lower and lower. So the Fed has held their projection of 2 more rate cuts this year, despite a slight increase in inflation forecasts coming for this year. So they are anticipating 2 more rate cuts this year. The bottom line, the Fed acknowledges that its policies are a little bit too restrictive right now. It's evident that they want to cut rates and know that something needs to be done, but they're cautious not to act too soon. So right now, it's kind of like driving down a long, straight country road, and then your eyes start getting a little bit tired, and your head starts to bob, and then you suddenly wake up and you go slamming on the brakes, and all of a sudden there's a cow in the middle of the road. Where'd that cow come from? Well, that cow, it's lower rates and rising demand, and it is coming. Watch out. Watch out for that cow. Right now, we're teetering on a buyer's market, and there's deals to be had out there. But your buyers need to stay focused before that herd rushes in and everybody realizes, wow, the rates did get lower. They're coming down. The mortgage payments are getting better, before they rush in and prices rise again due to low supply. So that's what I think will happen with mortgage rates. The slow descent will keep everyone snoozing away until someone wakes up, i.e. the media, and sees rates are now much lower than everyone expected, and they start to notice this. Then everyone starts to come back into the market. Prices start to go up again because there is no supply. So stay focused on that road right now. Don't let your buyers fall asleep at the wheel when we all know there are deals to be had. So speaking of supply and demand, many buyers often wonder why home prices continue to climb despite the high mortgage rates. Consider this. Over the last 5 years, there have been approximately 1.8 million households formed each year. Is supply keeping up with demand? So the latest housing starts really show a supply of new homes averaging about 1.45 million. There's a deficit between 1.8 and 1.45, and we had a huge deficit during the Great Recession where they built mostly half the amount of homes they should have during a 10-year period. So we're behind on supply. And are the builders selling homes right now? 100% yes. Their market share is almost doubled. And why is that? Supply, for one, as we just talked about. But the bigger reason is they go right to the pain point of the buyer, their mortgage payment. The buyers really want a lower mortgage payment. So the builders, they bake in the cost of finance incentives. They're made to sell homes. And so they know that the pain point is the mortgage payment. So they just make that mortgage payment or the interest rate lower. So do they reduce the sale price? Almost never, because they don't want to interrupt the sales of that particular subdivision. So they just bake it into the sales incentives, and it allows the buyer to get a lower payment. So, long story, how can the seller of an existing home compete with the builders? I'm glad you asked. So some of your listings have been sitting longer than the seller likes. Let's start with the reason why. I've said for the past 3 years that our biggest competitor is our boss, Jerome Powell, and the Federal Reserve. Over the past 3 years, they hiked rates 11 times to slow down buyer demand, and it has worked in most major markets. The listing agents, we know the biggest challenge for today's home buyers is interest rates. Then we should go right at it. We should fix the interest rate problem. Sellers can go after the buyer's biggest pain point, which is that mortgage payment. And how do we do this? By utilizing our Sell Like the Builder program, this is how you can go at it. So the question, are home builders offering incentive packages such as below market rates? 100%. We just talked about it. We can and must do the same thing as a listing agent. The Gaylord Hanson team's Sell Like the Builder program partners with listing agents and their sellers to provide below market rates, and we split the cost with the seller. That's right. We actually split the cost up to 1% of the sales price. So here's an example. 2-1 interest rate buy down lowers a home buyer's rate by 2% year one, 1% in year two, and then it goes to today's interest rate. If today's rate is 6.3 or 6.75%, that means the home buyer would get 4.7%. It's kind of get done. 4.75% in year one, 5.75% in year two, and then the remaining term of the loan, it would go back to the 6.75%. On a loan amount of $500,000, the home buyer lowers their mortgage payment by $635 per month. Do you think that's interesting to the home buyer? $635 a month savings by doing a 2-1 buy down. And what is the cost to the seller? Before answering this, ask yourself, do you think your seller would accept 99% of their asking price today? If so, then you should be offering this program. So the cost of the 2-1 buy down is typically about 2% of the sale price. And we, the Gaylord Hanson team, splits the cost with the seller, reducing it to only 1% for your seller. Now remember, your seller is only obligated to give this incentive if they receive full asking price. Otherwise, if the offer comes in lower, it is negotiable. So for more details, absolutely reach out to me, text me. So here's a little inspiration to end the video. So March Madness, it's officially kicked off and it's already happening. We had 68 college basketball teams take part. So why is it madness? Why do they call it madness? Because each game is single elimination. Win and you advance, lose, you're gone, you're out. So whether you're a basketball fan or not, this is an event to pay attention to. Why? Because these kids are fighting for everything in every game, every possession, every loose ball they're diving after. If you want to experience genuine passion, tune into a couple of games, specifically the last few minutes. You will notice a team that loses will have many kids crying their eyes out. Why? Because many of them are in their senior year and they are not going to the NBA. That's a hard level to get to. So this is it. This is the end of their career in basketball. So that was the last game they will ever play with substance. They trained their whole lives, countless hours, countless games, many wins, many losses, all to put it on the line on the very last day. So as a real estate agent, we don't have this same issue. You are back on the court every day. Every day you get back on it. Now imagine what you can produce playing like the college kids in their last game. Passion every day for what we do leads to excellence. So keep winning, roaring, and playing. And many people ask me, Bill, how do I refer you? The best way to refer me is to arrange a group text with me and your client using my direct cell number, 858-776-6830, 8 a.m. to 9 p.m., 364 days a year. Try me. So I hope you have a fun weekend. Happy spring, enjoy March Madness, and let the buying season begin. Gaylord out.